investors and treasure hunters, welcome to the July 17th terrific Thursday edition of the Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom. I'm the morning anchor here at TFNN.com and author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I'll be filling in for Tom this afternoon. I'd be grateful for a phone call from you. This is a call-in talk show. Our call number is 877-927-6648. My outcome during the next couple of hours is to teach you how to master the tools for trading. And that includes utilizing things like A to B equals CD patterns. These are technical patterns that I'll share with you. We'll take a look at swing points, Gartley patterns. We'll certainly take a look at volume. We'll really get a feel for what is going on in the markets today. And each of these signals, they're what I call tactical patterns. But tactical patterns alone, well, if you only use tactics, you'll get slaughtered. I'm going to teach you about strategy, and we're going to see some strategy today inside of the markets because we got some reversal signals as patterns we're completing exactly what it is that you want to see when you are trading and investing. Now, we had the Dow finish off 100 and they closed down 162 points, trading out at 16,976, closing out at 16,976. The S&P down 23 points. That's out at 1958. We had the NASDAQ composite off 62 points at 43.63. Russell 2000 off 17. NASDAQ 100 down 54 points. New York Stock Exchange up 127 points out there. You want to talk about market breadth to the downside? 1,927 net declining issues. Volatility, as Tom likes to say, in spades. How about the VIX index out here? The VIX index up 33%. 33%. That is just today. Now, the thing is, that is not the largest VIX index increase in one single day. Let me see if I can pull this up on my chart here real quickly. VIX index, actually, the highest day was 54%. Maybe we'll go back and take a look at that. February 27, 2007. August 8th, 2011, up 50%. August 4th, up about 35%. So we'll talk about what that means. Our call number again is 877-927-6648. Gold up $19. Silver up 41 pennies. What I want to start off with first is let's go take a look at the Dow because, obviously very unfortunate situation that has occurred over in the Ukraine with that Malaysian airliner being shot down. We'll get all the details, I'm sure. Hopefully we get all the details over the next coming days, but we know what the results were out there. And one could say that certainly started a cascade in the marketplace out there. But here's what's interesting. For those of you that listen in on my show, maybe Larry's show, that we utilize some celestial charting tools out here. One is called the Bradley model. In fact, if you take a look at the chart that I've got up on my screen, it's the Dow. Now, what's interesting about the Dow, both yesterday and today, and really today, what it did, now we're at all-time highs. So this is really going to be interesting because what the Dow actually did, like if you and I, if we decided that we were going to put together a textbook, and we were going to just focus that textbook on the 3 drive to a top pattern, this was the script that we would actually write. So we have the Dow at all-time highs. And a 3 drive to a top pattern, the first drive out here, let me explain to you what that is. The first drive, that takes place on June 20th. The Dow makes a high out there at 16,978. Then several days later, on July 3rd, so as we're just getting ready for the fireworks out there, the Dow makes another high, 17,074. Now, the expansion between those two, the expansion, Fibonacci expansion, 1.414, not necessarily, it's kind of a semi-common expansion out there. Then you have the Dow, it moves down into a low on July the 10th, moves higher in through yesterday, in through today specifically. The high today is 17,155.56 out here. As it makes that high, the second expansion, the second to third, so the second expansion, which creates that third drive, drive 1, June 20th. Drive 2 is July 3rd, making a higher high. Drive 3 taking place today. Now, these are not patterns that you want to force. These are patterns that you like to see have an equal period of time out there. And they are dead on the spot. When I was doing the morning show, we were taking a look at this pattern. I said, just because price is up here doesn't mean that that would be a tactic. Just because price has made a 1.272 expansion, that does not mean that this pattern is going to work. What you needed was a reversal signal. And what I said was we needed to see the Dow close below yesterday's open, 17,061.91. Well, it did that and more, closing out at 16,976. Now, of bearish or bullish patterns. This one here is a bearish pattern because it's 3 drive to a top at all-time highs out there. The only thing that could potentially be more bearish would be to create a island reversal pattern. Now, as I pull this back, hopefully you're watching this on Tiger TV, you're also going to see a blue squiggly line on my screen. That blue squiggly line is what's referred to as the Bradley model. Now, Donald Bradley, back in 1946, in fact, you can Google it, you can find the book. It's not a large book out there. It's titled Stock Market Prediction. He used all the planetary alignments in order to be able to map both negative and positive aspects to create this model. It's on my screen. Now, the Bradley turn date usually doesn't work right on the turn date. It's right around the turn date. But you can see here in the Bradley model, that turn date taking place today, yesterday. Well, we know today because it was completing as a bearish pattern was forming. And now what this says here, if the Bradley model were to be right, now I'm not saying that's the case just yet. If the Bradley model were to be right, what this actually says is that the market will make some type of low in December. Some type of low in December, maybe like around December 15th, December 16th. We'll always take this one step at a time, one day at a time. Is today the sell-off? That's just the end? Is it an overblown thing out there? The answer to that question is no. In fact, emphatically no. Do I expect to see a bounce in the marketplace? Well, I can tell you that for the last several years, all you've really needed within 48 hours in order to get a bounce is a VIX index reading of greater than 10%. Well, we got that and some. Does that mean it bounces tomorrow? Maybe it bounces Monday. I would expect a bounce. So I don't know that you need to, if you're not on the short train, like my clients, like my subscribers are. In fact, now is an excellent time for you to go test drive my newsletter service. And the guys at TFNN, they thought in honor of me filling in for Tom today, I did it on Monday. They said, why don't we put up on the website the opportunity for the listeners to go get a free trial. See, normally I charge a deposit for my services, because I know that if you don't pay for something, you typically won't pay attention. But they've gone ahead, and we're going to go ahead and offer you a free trial. That means there's no charge to your credit card at all. You can utilize the service for the next 30 days. No charge. You can cancel the service on day 29. So the only real cost to you is just simply the cost of all the information that you're going to miss out on and all of the good trades. So do yourself a favor and go over and go over the whole. And that only is going to last, I believe, through this weekend. So probably through Sunday sometime. If we take a look at the Qs, the QQQ, and this is where we're going to focus on right now. We had the Qs finish out the trading session at 94.62. And if we take a look at the volume today, the Qs were down with volume of 41 million shares. That's after making a high on July 15th, 2 trading sessions ago with 39 million. Yesterday, 22 million. Now, 22 million shares up at a 1.618 butterfly pattern. That's just a signature of the Qs actually making a top. Is this going to be a short-term top, a long-term top? I don't know. I just know that if we take a look at the Bradley model, we take a look at a 3 drive to a top pattern, it is awfully eerie. And we have the VIX trading above the 50-day exponential moving average. Now, today's volume was increased volume inside of the Qs on the way down. But you see, the Qs have this other pattern. The Qs have this pattern of actually forming lows with high volume, much like the volume that took place on April 15th when we saw the Qs trade down with about 84 million shares. That's what we're going to really need to get going. So with the mere fact that the VIX had a one-day reading of, 29% or so, what was it, 32%, up $3.54. In fact, let me go ahead and put up my VIX chart on the screen out here. All that was really needed in order for the market to start moving to the downside was to get the VIX above the 50-day moving average. That was at a price point of $12.11 out there. Well, it finished out at $14.54. So when I take a look at trying to put this together out here with regard to a market that could potentially bounce, I don't know that tomorrow is really it. Maybe it is Monday, and what you want to be looking for is you want to be able to look for a bounce that you can sell into, and that's what we're looking at as we speak here right now. Again, our call number is 877-927-6648. Steve Rhodes, author of Mastering Probability, which you can test drive right now. That offer's only going to be out there for the next couple of days. Totally free. No charge to your credit card. Go over to the homepage of TFNN.com. You'll see it on the upper left-hand side. And we'll be right back, folks.